The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour on this Wednesday, the 14th of May. Very interesting session after yesterday, and I'm going to go through this in great detail because we're cusping, as I told my subscribers this morning. We got to watch all the different levels, all the different sectors, because some are going to work, some are not going to work. That is, they're going to reverse. To continue here in some stocks would be extraordinary. If they do that, that would say they have extremely strong relative strength. Relative strength meaning strength that goes against the S&P. Probably should be the sector that they're involved. Sometimes it's just easier to make it the S&P. So thank you, Steve, for 2 great hours. What do you say, Wednesday? So Wednesday, I'll be doing Larry's show. Be able to do the full hour. I'll be here for 2 hours, and we'll get a chance to look at all these things: gold, currencies, whatever is needed. Even more importantly, I wanted to go through a couple of stocks that have been mentioned over the past couple of days by callers. I wanted to go through those and discuss why I was discussing what I was discussing. In other words, the weakness in some of the stocks that subscribers or tigers had called in about, and also some of the strengths. So let's just go through the numbers real quickly. Let me go through this. I'll move that away. I'd like to do it, if you don't mind. As I'm doing it, I'm just going to put up the chart itself. If you're looking at Tiger TV, probably I'm going to include the 120-minute chart here, just because we're talking about, if I'm talking about cusping, it means that we are within a day or two of confirming some kind of at least a short-term top. All right, so let's go. The E-minis peak C. If it doesn't go above 1898.50 today, it will be peak C. If it goes above that by the end of the day, leg C continues. I suspect, based on the 120-minute chart at peak D at 1898.50 and arching over, having taken out some important support. What I said to my subscribers every day in my opening call, I also include, gosh, I don't know how many charts did I have today? I try not to overdo the charts because I could just sit here doing charts all day. I mean, that's what I do. But I had shown, let's see, I've got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Oh, good grief. 11, 12. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 maybe. And the reason being, I wanted to show something that was very important. There's a sector that had been the sector for quite a while. It gave a dividend, gave capital gains, they gave everything. Then I thought to myself, okay, I need to look at this in great detail. When I looked at it, I said, this has all the characteristics of a couple of techniques that I discussed in my CD introduced in the Chapman Wave methodology. And I'm going to see if the next 2 days see some kind of a reversal. So I had to show a bunch of charts, and then it's a sector. So I also had to show one of the leading stocks within that sector. So that took up quite a few. Then I wanted to show something. We haven't even got a position in this. So I'll just talk about it very briefly as I go through the numbers. AZO, which is AutoZone. This is the heavy. This is the big deal in the auto parts sector, AutoZone Inc., AZO. Down 465 at 528. Made a high of 546. So it's only 20 points, 22 points off. It's not even 5% yet off its all-time high. But I'm suspecting that it's telling us, it's giving us a story here. It's saying this economy is starting to run into tremendous the selling of automobiles, even second-hand automobiles, and the selling of new automobiles together with the parts We've got to try to put that picture together. How a Ford, a GM, cries how these stocks are holding right now. Toyota Motors, Honda. It's going to be really important over the coming week. I don't think so. The question is, will that big candle at the top of Asia ever get tested? I don't know about ever, but I got a feeling that at least for now, that's it. And this is the candle you're looking at right now. This is the 120-minute chart. All right, let's go to the Dow is down 55 at 16,559. INDU. Look at this. There's a peak E. There's a pattern that I often talk about. I said it is unusual to have it. It happened in 2004, the December period, and then in March. So that was a bit of a space. Here we've got March into May, two Chapman wave stork leg formations, the leg, the body, and now the neck, and we might be forming the head. So what I'm looking at here is the chance that we might still make a leg F, but I'm suspecting that we are in some kind of a topping zone, certainly in the 120-minute chart. There's your peak D. I'll go to the weekly and the dailies in a moment, maybe a little later on. I want to just go through this in the near term because this is what's so important. So the Dow says very clearly, a close below 16,600 with a 16,562 absolutely imperative support to hold will say, we're done for at least the short term. The Dow should be going lower. A spike to a new high is, to me, it's still, we're in the same category. But a power move to the 16,800s by next Tuesday, Wednesday, I have to turn around and say, this is something that is a sight to behold. It's impossible to believe that the volatility index is going to go even lower, but certainly at that point it will be. And we just have to deal with it. Hopefully we will still have our 4 or 5 long positions at this particular point, and our shorts will have been taken out because we have added to the short side this morning. We'll see. This is a very interesting period. So those are the parameters I'm looking at. The S&P, SPX.X, the S&P is down forward 1893.42. Now, I can't count this any way other than to say it's a peak C if there's no new high above the high of yesterday of 1902.17. Just make it real simple. I'm anticipating that there will be a leg D, and my suspicion is it's either tomorrow there's a bit of a rally, maybe it doesn't make the new high, maybe we spike Friday, and then we turn around because it's a quadruple. Is it quadruple witching? January, February, March, May. No, it's I think triple witching, options expiration. So we'll see. Does it have to get there? It doesn't. But to have the 120-minute chart at peak C is okay. You can break down. That's a smaller term trend. I could even call it an alternate wave E. But boy, all-time highs in leg C in the daily chart, that would be so unusual. So I expect a nominal new high above 1902.17. Let me keep, this is now in the 1900s, 1902.17. Of course, I've got to type it into the chart, 1902.17. There it is. Okay, and I'm making it gray. Why? Because I'm expecting higher highs. And not much. I don't think we're going to go much more than 1903 to 05. And then I think we turn around. But the stochastic is at 84%. The MACD is still good. So I'm going to be watching that carefully. If I'm wrong, I'm wrong. That's the way it is. Let's go to the QQQ series. So we've got the QQQs, and then in peak C, and I believe there won't be a new high today unless it goes above 88.61. And if it does, it'll go to D. Peak C again in the 120-minute chart. So this is worth watching. I'll just quickly tell you that gold is up. The GLD is up 1 at 125.68. Gold is up 10 at 13.04. Silver's up 0.03 at up 24 cents at 19.79. High-grade copper's at 3.16. And we've got bonds up. Bonds, let me just show you. This is going to be really interesting. Then I want to go to our callers because this is what I wanted to talk about today. Bonds are up $1. 1.6 $1.0730. That was hard to say. In leg D, a recycled leg D to the upside in the continuous contract. Leg C in the June contract, I believe I've got. No, leg D in the June contract. So this is going to be really interesting because it's leg E in the 120-minute chart. I'm going to stop right here for the moment, and I want to go to Dee Dee in Bethesda, Maryland. Hi, Dee Dee. How are you?
Thank you so much for taking my call. I really appreciate so much. Yeah, I need your help. That last time it's after you got the X1. Yes,
XONE is the symbol we're looking at, folks. This is the X1 company. It's in the 3D printing. And yes, Dee Dee, so what did you do?
Yeah, that's what I spoke with you last time.
Right.
And I set up it. And today went up. You said Wednesday call you back. And they did went up today.
Okay. So when was the earnings coming out tonight, is it?
Tonight, yes. Yeah, tonight coming up. And I was wondering that I want to ask you that should we sell it all right now? What the resistance or?
Okay, so did you take anything off it before?
Yes, a third off.
Okay, so you took a little bit off. Now this is what I'm going to recommend.
Yes.
It's at $31.50. It was $1 higher this morning at $32.50.
Yeah.
Let's just make it real simple.
Yeah.
If it goes higher during the day and it can go up towards the 32 something,
Yes.
I'm going to recommend that you take a little bit more off. Here's my thinking.
Yes.
If you take a little bit more off, it means you've lost 2-3 points. Okay? Imagine that the earnings come out and tomorrow morning it gaps up 2.5 to 3 points. That means that you've got back 2.5 to 3 points that in the position you're still holding. That means that at that point you can start to make decisions. Now are you going to get out? Are you going to stay with it? But you've made sure that if the earnings come out tonight and it drops 2.5 to 3 points,
Yeah.
you don't want that at all. You see, right now what we're talking about is risk to reward. We're talking about the psychology of your investment. We're talking about the actual money involved. So I just want to be safe. I want you to live another day. I want you to be able to by tomorrow afternoon or Friday to say, phew, I lost some money, but I'm still in the game. I'm still able to make it back. But if it suddenly drops 3.5 points, then, I mean, that's not good. So give me a moment. Let me just look at the 120-minute chart, and I'll get back to you, and we can make a plan, okay?
Okay, I appreciate that so much.
I'll be back with Dee Dee in Bethesda, Maryland, looking at XONE, up $1.34, got earnings tonight. It's come all the way back from its recent high of 70-something. I'll be back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Up and down. This is going to be very interesting. I'm on the line with Dee Dee in Bethesda, Maryland. She has a stock called the X1 company. The symbol is XONE. I've just done a what I call a left side, right side arch formation analysis. It made an exact left side, right side price time match to the 30.50 low of that was of the 28th of April. It went up to a peak F, sixth highest peak on the 6th of May in the 120-minute chart at 11:30. That is an exact. You know how people say the price goes up and it comes down much quicker? Well, it didn't. It came back down in exactly the same amount of time. In fact, it took 1 day longer. No, it didn't. It took 1 day shorter, and then it broke the 30.50 low. It went down to a low today of 30.06. If I didn't know that there was earnings tonight, Dee Dee, I would say to you, there should be a bounce in XONE. It's trading at 31.56, up $1.35, had a high of 32.28. I would have said to you, it should be ready for a bounce to the 33.5, maybe 34.20 area. But the earnings, I got a problem with the earnings because the whole sector has been very weak. I don't know how this one stock could suddenly change its stripes when it's been down so badly, but we have seen that stocks that keep coming down, sometimes they come out with earnings and then they get a pop because the earnings are a little bit better than everybody was thinking. And that's what you really want to trade. So the more I think about it, here's something that I want you you don't have to implement it, but just think about maybe doing it. I don't want you to risk
Uh-huh.
2 to 3 points down from here. And that's a possibility.
Yeah.
So I'm going to suggest that you take something of even, I would prefer if it was $1 higher. But you know what? $1 is not going to make much difference if it's going down 2 points or 3 points. $1 is not going to make much difference if it suddenly pops up 2, 3 points. So I'm going to suggest take a little bit more off now, even though you're taking off at a loss. Why? Because if there's a fabulous spike to the upside tomorrow, there's a chance that on average, you will not have lost very much, and your capital will be there so you can live another day very easily without having to think, oh, no, now what do I do if it's trading at 28? If you had your full number of shares and it was trading at 28, you would just sit with this waiting and waiting. Isn't that so?
Yeah.
And I don't want you to sit because there's going to be opportunities in the next few days even for some good trades, both short and long. So I'm going to think about it. You don't have to implement it. If it was me, I would take more off right now. I'd say it didn't do what I wanted it to do. It made a peak D in the daily. It should bounce from this level here. If there wasn't earnings tonight, I would say raise your stop on part of your position to today's low of 30.06. And if it goes, at every point it goes higher, I would raise my stop. But earnings can put a halt to that whole thing because by this evening, this thing could be anywhere. I don't want you, you know what I'm saying? I just don't want you to lose more money on it. I want you to keep that money because you're a good trader. You'll make it up over a period of a couple of months. You'll make it up more than that. You'll make up. So you know what I'm saying?
Yeah. Should I take it all off then? Because I only have 100-something points left, 150 left.
Okay. If you've got 150 left.
Yes. Should I get like 32.50 that you recommend and just take it all off?
Yes. If it goes to 32.50, I just don't want you to be risking that kind of money to suddenly see it go back down again. And you know what? You could even take 100 and keep the 50 just to see what happens, because at 50, if it pulls back sharply, it's not such a big deal. But at 150 or 200 or 300, that's a big deal. But if it does rally sharply towards the close today, I would take at least 100 off.
Okay.
And then if it has a really good pop, that 50 will make up something. You know what I'm saying?
Oh, yes, yeah. It was very kind of you. I appreciate that so much. So I take 100 off and left a 50.
Yes. And normally I'd say I'd keep it and raise the stop because by tomorrow it could go again. But it's earnings. I can't do that. Thanks so much for calling, Edie. Let me know how it goes.
Thank you so much. Have a wonderful day. It's so nice. Thank you.
Thank you very much. Well, we'll see if I'm wrong if the thing spikes up 5 points. Anyway, folks, we do our best here. I'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, everyone. I had a question about bond yields. So let me show you my triple yield chart, which I usually show my subscribers every week or as often as needed. I've been waiting to see whether or not from last week, this week, by Friday, the 30-year yield, this is here on the chart that you're looking at. This is, the white is the 30-year. Let me just squeeze this so you can see this if you, right there, squeeze. Okay. If you're looking at this, you will see the cluster formation back here at 54.08. That was way back in, I used to have this typed up. I'll type it up again. 6/15/07. So that was June of 07. So let me just put there 6/2/07. Now, what's important about this is that's where they clustered together all the yields, way back at 5.4%. Look what's happened. It's gone down to, at some point, it's gone down to 25.19, 2.5, and then it's gone even lower. It's gone down to, whoops, I'm looking at the right one. Yeah, the white one, 2.4, 2.4, yep, and 2.4 back in July of 2012. Now look at this. When you're looking at the white is the TYX, the 30-year T-bond yield. The 10-year is the T-note yield. That is TNX.X. And the 5-year T-note yield is FVX, the cyan. So white, gold, and light blue. When I'm looking at these colors, I just immediately think of the paintings that were just sold. Now, I've tracked this for, decades. whenever, and do you remember that about 2 years ago, into a year ago, I said, watch modern art. We're going into another phase. We're past this kind of impressionist phase. We're going into contemporary art. Contemporary art meaning that prices of art in the contemporary field that could still be 100 years old, 70 years old, 60 years old, but contemporary, should begin to soar. Well, was it Sotheby's yesterday? They had a sale, the Rothkos, we're talking Warhol, the Race Riot, goes for 63 million. Francis Bacon's painting goes for, I think it was 80 million. And then Barnett Newman, he's got this painting. I always love this. Whenever I go to the museums, and I go to like the New York, to go to MoMA, Museum of Modern Art in Manhattan, I'm always staring at these paintings. You're here in Boston as well, but you've got these big canvases, and there's blue, and then you stand and you go back. It's like 10 feet by 14 or something, and then there's another one, green, and then you see there's a little white dot, and then you find out that the painting actually sold for some unbelievable amount. How do you gauge? Well, it's impossible, really. There is no metric. There's no mathematical metric. So when I answer people, I was, when I left high school, I went into graphic arts, so I understand a little bit about it. When you look at these paintings, you have to appreciate that when you're looking at a stock, the price that you see it go by at is the price that it's worth at this very moment. I'm going to bring in a whole bunch of other thoughts as well. I'm just going to do that because we're looking at the yield charts, but we're in no hurry right now. I'm in no hurry. So the price that is paid is what someone believes it is worth. That's all in the painting. There's no fixed metric other than the last price that was paid. So it is judgmental. It is it's subjective with objectivity. Obviously, the cash, what you're going to pay is the objective. That's the amount you can afford. A whole bunch of things go into it. And that reminded me this morning, I was just thinking, would you buy a stock? Would you buy a stock at, let's say we're going to buy 100 at 25, 1,000 at 25. Imagine. So you're going to spend 25,000. No, maybe it's 35. So it's 35,000. No. Maybe it's 45,000. So it's 45. So you're going to pay 45,000. Oh, maybe it's 55. So you pay 55,000. Would you buy that stock if within 1 second of you actually closing the deal to buy it, it was worth 5 to 7% less? And then imagine you have to pay a tax on it. And imagine not only do you have to buy a tax, you still have to insure what the stock. So that you paid, let's say, 35 grand, but it comes really to 37.50 or something like that, right? But as you check off that you're buying it, it is now worth 3 to 5% less. Not only that, a week later it's even worth less, and a year later it's cut by at least 30%. I'm talking about an automobile. With a painting, there is not necessarily that same immediacy. So when you buy a painting, yes, you can love the painting. I suspect when you're getting up into the millions, you don't just love the painting. It's an investment. Even if you in the back of your mind saying, no, it's not an investment, it is an investment because you're expecting for it to appreciate at some point. If not now, for your next of kin or grandchildren or children, whatever it is. So when you look at it in that light, it is not the blue painting or the green painting with one dot on it or a stripe. It is the provenance. It is what it involves. It is the works of art of this particular artist. Maybe it's rare, maybe it's this, maybe it's that. Maybe you could have done it in your backyard. Not the point. The point is you've got a piece that is valued by other criteria. So you can just shake your head and say, how, what, where, who, what? It's got nothing to do with it. The painting is the painting. And yes, sometimes you can get a 5-year-old that can produce a work of art that looks unbelievably beautiful. And if it had the name Warhol on it, there would be a little difference between the value of the painting being 45 cents and 45 million. Okay, now I'm going back to the colors that we're looking at here. I've got a couple of thoughts in my mind. The number one was that there are certain things you pay because you want it, but in terms of an automobile, you will never again, ever in the history of the life of that particular vehicle, get the price that you just paid. If it's a work of art, there's no guarantee that you're going to, a lot of the time for the last big cycle, there were artworks that were sold for 12 million and then later went for 5 or 4 million in the depths of the last 50%, 55%, 53% pullback in the market. So you got to appreciate that it has other things. So now let's go back to the colors of the yield, my triple yield bond chart. And of course, being visual, that's what provoked that entire conversation, because you got the white 30-year T-bond yield, you've got the golden 10-year T-note yield, and you've got the 5-year, which for the first time has shown that we have made that double top that I've been talking about in the very, my least favorite pattern, the cup and handle pattern. 1848 was the high that was not taken out, and that 1848 was 1.848 was the level that we were looking at from the high of September, the week of September the 20th, 2013, where it went to 18.48. Now it's pulled back, made a cup formation, made a smaller cup formation, couldn't break it, went to 17.77, then 18.11, failed again, and now it's gone below the 4 weeks or 5 weeks ago, the low there, which says the question being in the with a premise that that when I'm looking at those bond yields that are the bonds themselves just now, when I said recycle to leg D, and those weekly charts were still very positive, it tells me that there really should be a lower low under the 33.49 level in the TYX, which will start leg D. There's only leg B as it's going on right now in the 10-year, and you've got a nominal leg B starting down in the 5-year. The question is, will yields go lower? At this particular point, it absolutely looks like it. Now, this brings me to, I like to relate. I've got this Rubik's Cube where I try to fit all these different ideas into a sequence. Well, thinking along those terms, whoops, I almost lost that thought. Let me go back again. I was right here talking about the 5-year yield, talking about, oh, yes. When I was interviewed by Tom yesterday, I was discussing why I'm a little cautious right now for my opening call for my subscribers in my Traders Corner, why we're about to implement, which we have, short positions. And one of the reasons being, now I'm going to jump around, if the dollar is rallying, and this rally actually has legs in the dollar, then what we're looking at, oh, and by the way, the TNX, the 10-year Treasury note interest rate, TNX, has in fact made a peak D in the monthly chart. I'm about to change this to a different symbol. That's why I thought I'd bring it up. It broke above the trend line resistance. This trend line has to be support, which says, watch out right there, because the TNX, the 10-year, could in fact touch sometime in May to June, could touch 2372, 2.37. That would be the support area. But the MACD is still holding well. Stochastic is very poor. It's not very poor, but it's turning down quite sharply at 74% in the monthly chart. Now I'm going to show you the dollar. And the reason why I'm bringing all these different things up right now is because in the juxtaposition of the pins as they get knocked over, what's really important, if the dollar is able to maintain, it's making a possible peak. Actually, this could be peak A. I called in the dollar. Let me go to the dollar itself. DXM14. DXM14. Ah, good. I can see that. Now let me check that out. So 79970. Oh, what happened? Oh, no. Oh, they're exactly the same. I've decided, and I'm making an announcement, that I'm in the dollar index. I'm calling this a Chapman Wave Phantom A. It's very unusual not to get a peak when you've had such a big move. So I'm calling this B. It really is technically in the Chapman Wave. It should be A. I want to get to D as soon as possible. I don't want to be stuck at C waiting for a D and it doesn't happen. Everything about this characteristic here, if you go to the 120-minute chart, what time was that? 120-minute chart right here. So let me show you what I've done. You can go, this is the dollar itself. This is A, B, C1, C2, and then it goes to D. So you can see that 0001 could very well, let me just double check here, 970, 965657, there's your 70, there's your 70, there's your 65. So we've got C1, C2, C3, C. So that's it. So then it spikes up to a D. So the 120-minute chart. So I feel very comfortable giving this what I call a phantom peak here. Why? Because it allows me to be a little bit ahead of the game, not waiting for something that might not happen. So in this particular instance, the dollar is saying this is one of the best single leg moves up in the daily, but in the weekly chart, we've seen this before where it spikes up and then fails in the second week. So what I'm looking at here, the characteristics of the MACD holding so well as the price was coming down, the higher divergence between the low of the dollar, oh, I keep hitting that, the low of the dollar when it went to, on the week of the 14th of March, it went down to 79.375, yet the stochastic has made a higher low when this time the dollar went down all the way to 98.93. I like that divergence. So it's a start, and it says this dollar could move higher. Bonds could move higher. Rates come down. That could put pressure on the market. I'll be back.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks. I want to keep, for a moment, at least stay with the TLT. I will be doing Larry's show straight after this, so we'll have time now. I also have I think I have a problem with my the Basil Chapman at TFNN.com email. I'm not 100% sure because I got the old... I just love the way it works. I had loved the way it works, but it seems to have given me a problem here. So on my 3 different computers here that are getting email, I'm getting some, I'm not getting, I'm not sure I'm getting them all. So if I haven't answered your question, I apologize at this particular minute. Now, let me just do this. I wanted to clarify something. I discussed this. Remember, I spoke a moment ago about the Chapman Wave Phantom Peak. It is a particular methodology that I developed a long time ago. I can't remember if on the CD, I'll check during the break if I actually discussed it. I think I mentioned it in the dictionary of terms, very comprehensive dictionary. But what I did, because the TLT made a high back in March, I think, was it in March? Yeah, March, the week of the 7th of March, it went to 109.18. And then I need to just check on something else while I'm doing this. Let me go here and click on that. And then what happened is there was another rally, and that rally, I'm going to open this up because I can see it's a little bit messy. I don't want to mess you. I really want you to be able to see this very clearly. There. And then there was another rally that went to a peak C later on, and that was back on the 28th of March. And then there was another rally that went to a higher high on the 2nd of May, week of the 2nd of May. And what I said is, I'm going to call, and I even made it red just to show that although that didn't make a real B because it was underneath, all the characteristics were there. And I said, because the MACD is holding so well and the stochastic is holding well, it's not going to make too much difference to me. I'm going to call it a B because if I get to this letter here, which is phantom D, and then bonds start to break down under the 9-period moving average, I'm at least ready for it. But if it holds, that's fine. Now what I can do is I can say, you didn't have to need that. You didn't need that at all. Everything did hold very well. And now you've got yourself B, you've got yourself C, and today or yesterday, you started the official leg D up in the weekly chart of the TLT. So you understand that I do this almost as it's a cautionary thing. There's no way I could explain to a computer what I'm thinking, anything. This is one of those, this is where the methodology is subjective, but I know the objective. I know exactly what it's supposed to do, and I'm explaining. And I explained, look, here's the pattern of the lowercase h that can go to an M and then break out. What are we doing? We started the next level, next attempt at the M pattern, broke out. That is very positive, and it says you should go to the next highest candle of importance. Well, the next highest candle of importance would have been the high of this very ugly candle of 114.08, and that's kind of where I would say that's going to be that candle and the little wick of the candle before it at 114.66. That's kind of what I'm looking at right now. MACD is still great. The stochastic's at 88%. Nothing wrong with the TLT, the 20-year Lehman T-bond fund. So let me just get to that. Then I don't know if there are any questions yet. No. So and then I wanted to. I didn't want to say to Dee Dee right then because we were talking about the most important thing, which was XONE. But I did want to tell her that she spoke about another stock. There it is, Splunk. Look what happened to Splunk. That's why I said you can't go from a risky investment to another risky investment. Wrong thinking. So I'm pleased you didn't do anything there because that dropped a full 3.5 points from where we spoke. I'm going to be back for Larry Pizzavento's show straight after this, so stay tuned. Otherwise, hope to see you tomorrow for the Tiger Technicians Hour. Check out
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.